Welcome back to the Yawning Podcast. Welcome back to the I Hate Insurance Podcast. It's been a while since we've been in Utah. I think the last one we did was in Las Vegas or down in Florida. So welcome back. We got a lot of stuff going on.
Parker got some suede boots.
Got some new boots for my wedding. Yeah.
Parker got married. Good day.
Good day. And RJ wants to talk about some stuff that's going on. So one of the things he wants to talk about is the difference between deductibles and risk share.
So, I think that as far as insurance, I look at it as a partnership. Most people, buy insurance based on the cheap price. And if you actually look at homeowners or business insurance or whatever, there are so many exclusions. Homeowners, convective storms now have a cap and a big deductible. So if you have a $10 million building, they'll only pay $1 million on a hailstorm. And so, again, it's like being half pregnant. Half a solution doesn't help you, and it costs you more money in the long run. So at the root of all of this, is deductibles, which in the 50s and 60s, homeowners, $100 deductible was a lot of money. As time has gone on and claims happen, deductibles have been raised. And deductibles throw a wedge into the partnership because your interests aren't aligned. And I learned that when I first formed the insurance company, and all I could get was crappy, fake reinsurance, where, there's a long list of exclusions, there's limitations, there's caps on certain events, where, as an insurance company, you find out you didn't have what you thought you had. So, that's not a partnership. That's a business structuring, I call it a can of corn. It's not for you. It's been designed by them to make money. Now, most cases they get it wrong. That's why they go bankrupt or they exit the state like they're doing in California with wildfires, now convective storms throughout the middle of the country. So bottom line is most people are more self-insured than they are insured.
I think they're not only raising or canceling people, they're raising rates crazy too.
Yeah, the rate goes up and the deductible goes up. That means, you're really dumb because you shouldn't have to do both, right? And so again, deductibles are evil. And as an insurance industry, we should eliminate deductibles so that we both pay a portion of every claim. When I have a claim, like my boat claim with Jake at State Farm, who isn't a good neighbor, they didn't help me fix the boat. They made it more painful. That means, I was a dumb buyer, and I'm an insurance guy. So everybody can make bad decisions, but I think we need to learn from our bad decisions. And so, our approach is to custom fit coverage and play out the claim, do a mock claim. And, if you own a $1 million house and you have a $100,000 roof deductible, you don't have $100,000 laying around. And so when you have a claim, the roofers, just like body shops with cars in that setting, they are going to up the bid to try and help the insured cover the deductible. So again,
this guy came over yesterday, a roofer, at a certain point, if your roof's old, the insurance company doesn't cover it.
Well, it's depreciated. So if you have a 20-year roof and in the 20th year, you want to replace it, insurance isn't going to pay for that because it lived its life, right? It puts you back to where you were. So if you had a 10-year-old roof and it blew off, you would be paying the depreciation on that roof. So you'd have to come up with half of the roof plus your deductible, right? That's all stuff that we should talk about during the underwriting process. because that's going to be a big number on depreciation that you're not even thinking about. So how do you know if you can pay your deductible, which most people can't? So if you get rid of deductibles, you don't have depreciation because you underwrote it properly, right? Going in, you tell them, not only are you going to have your deductible, but you're going to have the depreciation because your roof's 20 years old. So you really can't have a deductible. So the solution is we share risk on a percentage basis. Which
So
means,
with a shared risk, someone has a 10-year-old roof, how does it work?
well,
Where's the deductible, like a $2,500 deductible?
okay, so let's just use simple numbers. If you have $1 million house, you have a 10% event deductible on most roofs. Storm, hail, whatever, right? So if your roof is 10 years old and it's a $100,000 roof, you have a $100,000 deductible, plus you have the $50,000 depreciation on the roof. So now it's not a $100,000 deductible, it's $150,000. So again, it's just math, right? And you should do a mock claim before, and then people would realize, well, I don't have a $100,000 deductible, I have a $150,000 deductible. If I replaced my roof last year, then there's no depreciation. It's brand new. So you still have a $100,000 deductible. Can you pay it? The problem with deductibles is by design, it's supposed to get the insurance company out of paying claims that regularly happen. And so they raise the deductible and the rate all the time. If you get the foundation of your plan right, you insure to the proper value. That's the other thing. People will have $1 million house and they'll insure it for $800,000. Certainly, that's going to reduce your rate because you're paying $200,000 less. But in a claim, you get penalized because you never insured to the right value. It's called a co-insurance penalty.
Yeah.
Earthquake, no coverage. Mudslide, no coverage. Wildfire has a special deductible. So when you look at what I have coverage for and what I don't have coverage for, it's simple math, but nobody wants to do the simple math. And in Florida, everybody I talked to, the one lady that was on LinkedIn, we gave her a risk share. We gave her the right coverage. We include flood. There's no $100,000 roof deductible. She would pay 10% of any claim, and I would pay 90% of any claim, so that if she had a $100,000 claim, she'd pay $10,000, not the whole 100. That's more of a partnership
So
where we're working together.
She has her roof's been through half her life, 10% risk share. She's paying 10% of the deduction,
the loss,
right,
and 10% of the depreciation,
right,
the life of the roof. Or it's just like a helicopter. The blades are only good for so long. If it's a brand new blade, then it's worth the full value.
right.
If you run it down to where it has no life left, that blade's not worth anything. Insurance isn't going to pay for it. So insurance puts you back to where you were. It doesn't improve. You don't get new blades or new roof because you had a claim at the end of its life. So depreciation does come into all property insurance where it's, you're covering the insured. And again, doing a mock claim and walking through, this is what a claim looks like. And if they understand that and agree to it, great. But most people don't understand it, just like I didn't when I started buying excess of loss reinsurance. Now we've done this for so long, I get quota share reinsurance, and it's way better, right? Before, when I got crappy reinsurance, I'd issue $1 million limit. I took the first $250 of any claim, and I paid a significant amount of the premium to the reinsurer that would pay anything over $250 to $1 million. So their layer was $750. Well, now our interests aren't aligned when a claim comes in. They don't want to pay. They want you to pay. Settle the claim.
Keep it under $250.
Yeah, that's their goal. And if you don't, they increase your rate and double your deductible. So, I have quota share. I pay my reinsurer, Chubb, Renry, whoever it is, 10% of the premium, and they pay 10% of every claim. Our interests are now aligned. Yeah. We're on equal footing. So I'm just taking my common sense, my experience, and saying, look, this makes common sense, and it benches the lawyers, right? Because you've done it right. Everybody understands what a claim looks like and how they're going to have to perform. If an insured can't pay their deductible because it's high, it's not a percentage, what do? They go get a lawyer, and everybody starts suing each other, and it's like a bad divorce again. Right? If you're going to get divorced, you can just split, walk away, not pay lawyers anything, right? That's what we should be doing in the insurance business, is doing our job. If it's a homeowners, you do the right foundation, you insure it right, you go risk share, no deductible, you cover all perils, you can't be half pregnant. If you cover wind and not flood, you think those two policies are going to work well together? No, they're going to point at the other policy, and it's going to be a bad divorce. It's an argument.
Be a lawsuit.
Yeah, and so by design, over the years, we've evolved into this machine that feeds lawyers and grows litigation. We can make better decisions by deciding if we're going to take your money, we're going to make you happy, and we can add value. Insureds have to decide, like the lady in Florida who's posts on LinkedIn all the time. She complains about the insurance industry, which I agree with her on. And we gave her a quote. She paid $7,000 with a new company that the guy started after his old company went broke after the last storms, and she complains about him all the time on LinkedIn. His price was $7,000, no flood, no sinkhole, no mudslide, no earth movement, no earthquake. So she has very limited coverage. For $3,000 more, we gave her everything. No deductible, risk share. $3,000. No, she's cheap. So again, people are going to fall into this category. You want cheap insurance, and you'll pay later. She had to fight to get her claim paid the last time, but she spent way more than $3,000, and she's doing the same thing over and over again, which is actually the definition of insanity. The system doesn't work. Anytime you test the system and the insurance companies go broke, or they exit the market, or they double your deductible and double your rate, it was a bad plan. When we do our job, when the worst happens, a truck accident or a fire or a death or a homeowner blows up, we make them happy and we keep insuring them. Yeah. That means you did your job right. I mean, I compare it to like Porsches, right? If every Porsche you saw was broken down on the side of the road, do you think people would keep going buying Porsches? Do you think salesmen would keep selling Porsches? No. But for some reason, as an industry, we continue to evolve in a direction that doesn't work and actually grows litigation. That's why Florida is the suit capital of the world now. And we as an insurance company can change that tomorrow. We can bench the lawyers by changing our approach. The buyers of insurance also have to make a better, different decision and pay more, which costs them less in the long run. Yeah. Everybody's getting raked over the coals, and the lawyers are getting all the money because we do business in a bad way, insurers and buyers. It's just math, and we have to do the job, and we have to survive what can happen. When what can happen does happen, we should be prepared for it. It's almost like Super Bowl, right? Guys who are professional, they score a touchdown, they throw the ball down, they run off, right? The other guys, they celebrate like they're surprised they scored a touchdown. Yeah. Like, that's not impressive to me. You're supposed to score touchdowns. That's your job. You get paid a lot of money for it. Same with insurance, right? Our job is to deal with the catastrophe. We run into the burning building, we make it less painful, and we keep insuring them. The fact that everybody gets out of the business or goes bankrupt should show people, I got to make a better decision. I need to actually think this claim through and see value if somebody offers me a true solution that's more money, but it's worth it.
Yeah. So that leads right into the next topic, Uh, insurance versus true insurance, TRU insurance.
Yeah, so that's our term. We've trademarked it. That's what I want, right? If I own a bar or a hotel that has a bar and a restaurant and I have liquor, and some program offers me a package that's really cheap, but they don't want the liquor, and they send you off to buy a separate policy for that, that is fake insurance.
It's just like with homeowners excluding
They don't
flood
want to
and
do the whole
wind.
job. They want
They
to
just
cherry pick what they see as the best part of the risk. And yeah, we don't do that. Well, then you really shouldn't insure those people. You can't do the whole job. You can't be half pregnant. You have to do the whole job. So, it should be custom fit. It should be adjusted and massaged. And in, today's world, work and play and personal all overlap, right? And insurance is designed like in the 50s where the wife sent her husband off to General Electric with a lunchbox and he walked through the gate and worked there and then he came home. Nobody does that anymore. People are working from home. Their dogs are excluded. We got a call just recently with, unfortunately, a nursing home where some disgruntled family member went in and shot people. Right? Well, they don't have firearms coverage. They don't have active shooter. They don't have assault and battery. All of those are fine print and exclusions within the policy that mean they took your money, but they're not going to cover what can happen. And that's, again, our job is to provide true insurance. Right? Active shooter probably isn't likely to happen in your place, but when it does, you need the coverage. It actually happens a couple hundred times a day in the United States now where people do stupid stuff. They can do it with a knife. It's just not a weapon. They can blow the place up. There's all kinds of things. And again, we can reduce the risk by having a plan and we do things properly. We have catastrophe plans. We're prepared for the worst. We're not going to cancel you. We're going to continue to insure you and help you through the difficult time, just like the playground. Your good friends stood and fought with you. Your bad friends ran away. So, this is so basic. It's simple, but you really have to customize coverage for everybody. If you don't have firearms, then, maybe it's not a big deal.
for your situation, like I just got one that's what the e-bikes, those electric bikes, the Surons. No one wants to insure them because the batteries, and they want to allow test rides, and they want to start doing rides. So, I mean, that's
there's
one
a
where they're
way
trying
to
to
do
piece the coverage together. Like Gallagher's writing it now, and they're piecing it together, but they don't want to do one. And it's like, just we want to come in and provide the true coverage that covers you the way you're supposed to be covered.
Well, anyway, one of the cool, we've had lots of, from 1980, Frank Lucas, my old marketing guy who retired this year, he would tell everybody I saved his business in 1986. Nobody would insure him. And that's really what we've been doing. And now they're coming out of the woodwork because the insurance world is in turmoil. So we have, we just insured Friends of Army Aviation, which is in Georgia, Ozark, Georgia, dealing with the general and a bunch of very experienced military enthusiasts, and they served for us in wars, and they can't get insurance anymore. The price, I think, went from $30,000 to $126,000. Now, we reviewed their policy. They didn't understand the coverage. They had no idea, how it works, and the broker, who's one of our brokers, didn't explain it to them properly. They didn't bring us the account, right? They told them this is all we got, and it was with another market. And we bound it today, but it's old H-1UE helicopters that they take to events. I think there's 15 events around the country, and they give rides, and it's a nonprofit 501c3, on my helicopters, I have the HUMS device that tracks everything. And the guys who run that, Kenneth, he went to them and installed them on their machines.
The Homes device
Yeah,
on all of them.
well, they have 2 operating. They have 3 total, but
And the Homes device just records vibrations.
yeah, but there's like 16 on my B3. There's 16, tracker devices. On the MD, it's less than that. On the H1, I think it's more. I don't know.
And it basically tells you if anything's going out of
Yeah, it's a
balance.
pre-warning system. If your tail rotor's going out of balance, the pilot might not fill it until it's, too late, and it slowly does it. This basically gives you a report after every flight telling you your generator's going bad because it senses a vibration, and they can track it down. And so, I met Ken when I was having my helicopter serviced and added it, and, it's not cheap, but it is peace of mind, and it is should be encouraged by the insurance industry, but obviously the insurance industry doesn't think like that. So, with the HUMS device and the way they've operated, and I've been on the phone with them the last couple weeks, and on the whole value of an H1, like Dave Sparks bought, what do you think it is? You can buy one really cheap, but they don't fly.
Yeah.
Then you got to take them to a shop, and you got to invest all this money into it. They had them insured for $500,000, and I told them, I said,
They're worth like
that's not the value of this, And so when you have a claim, what are we going to do? What does a claim look like? Because you're not going to be happy, and if I only have to pay you $500,000 for aircraft that's worth way more than that, So we dug into it, and basically their setup is such that, they're probably one of the safest operations in the country. Obviously, there was an old plane that went down at a similar event, and everybody perished on the plane. So now nobody wants to insure any of these older aircraft that are doing air shows anymore because they had an accident, just like the balloon accident where those guys jumped out. Anytime stuff like that happens, the insurance industry panics and starts running for the doors. So we came up, with a customized approach that works for them.
So do they have whole coverage or no?
No, they don't need whole coverage because they can actually get other aircraft, and they put them together and make one good aircraft. But they couldn't afford to insure it for what it's worth. I don't know what they're worth really, but if you insured a private one like our buddy, you'd probably need $10 million or $8 million to replace that like it is once you get it up and running. You bought it for less than that, and you get pieces and parts, and the time and the effort to get it all flying is all volunteer for them.
At least $5 million.
Yeah, I have no clue. It'd be dependent. If it's all brand new parts and you're putting a brand new H1 together, which I'm not sure you could do because I'm not sure where you'd get the parts, but I'm sure it'd be well over $5 million bucks. But, it's difficult. Same with cars, same with boats. A boat that MTI would have sold for $1.8 million before COVID. Now guys want them so bad the price goes up to 2.8. That the value creates all kinds of confusion, right? And if the market goes down and I can replace that boat now for less than what you paid, those are things we need to agree to so we're both happy at the end of the transaction.
Right.
We insure you. Okay, we're not paying you 2.8 because that's what you paid for it, because I can replace it for 1.8 now or 2.1 or whatever, because the markets do go up and down. So all of this,
Supply and demand.
nobody thinks about it though. Everybody's trying to sell insurance and they don't want to talk about the claim. And that's why when claims happen, it's always disappointing, to the buyers of insurance because it wasn't explained to them.
So some cool stuff happening. The race boat's almost done.
Yeah, working on it hard, and
It's all rigged. The motors are getting put in today. Gannon's out there doing some filming.
yeah,
Should be running in Michigan City at the end of the month. Also,
that's cool. But
yeah,
the cool shit I was talking about
is Bob
was
Adams.
insureds finding their way to us when the market doesn't have a solution. And, that's how it all started in 1986. So that was an insurance crisis. The insurance crisis is growing now, and we need good partners, and insureds need good insurance company partners. And, any insurance company could do what we do, but will they? I don't think so. I think we're the only ones offering this at this point, and as time goes on and we continue to prove it and help more people, I'm sure there'll be more people join us. But everything that I've done for 40 years is litigation. Whether when I got arrested in Chicago and sued them and won, now I'm suing the state of Utah here with a couple other guys. We didn't want to make it a class action big deal because there's really no win to it, except we're suing the state and the county assessor for breaking the property tax code. And so, when we got into the suit, we identified who the county assessor was, and we met a guy who was running against him, and we supported Bob Adams, and he has now been elected to replace the guy. Right before the election, the court case went to the judge, and the judge basically said to the state and the county assessor, based on the state auditor's report, that they're breaking the law. He says, I don't know what you guys are going to do. You're in trouble. So, that was before the election. I don't think it had anything to do with Bob getting elected, but, we are fighting the fight that needs to be fought. And that's what I think fundamentally everybody has to do in their own business and in their life. If you take the easy road out, and I refer to lawyers because they always want to bill you all the way till the courthouse steps, and then 98% of the cases settle. And if you're going to settle, you should just pay up front. Because what you end up doing is it's a frivolous lawsuit. You spend $300,000 pretending like you're going to fight, and then you pay the $1 million limit anyway, and you could have just paid the $1 million and saved the $300,000. But you know who doesn't like that? The lawyers, because they don't get to make the $300,000. Right. So again, it's like a bad divorce, right? We don't have to hire lawyers, and I hire lawyers. I had to hire one to sue the state, but it's costing a lot of money. There's, no benefit to me except my personal property, and I hired the best tax lawyer in Utah. He refused to sue because he was like, Rick, you can just appeal on your own. You shouldn't worry about everybody else. And that's the way big government and bad things happen, is because you worry about yourself, right? When you do that, you're basically thinking you're safe and everybody else I don't care about. But eventually it bleeds into you too. You can't make bad decisions and not end up in a bad place eventually. And that goes with standing up for what's right, doing insurance right, actually not worrying about selling insurance, but making sure that if you insure those people, you can make them happy. And the law is on your side, right? Winning the case against the state, the county auditor, all the lawsuits we win. Everybody says, well, what happens when you don't win? Well, when you don't win, you appeal. What if you lose the appeal? The last guy that we actually won, he said, I could lose my business. And I said, so you think you're building a business and you're going to pay a frivolous lawsuit, which means that you aren't building anything of any value. Every time you get a little bit of money, somebody's going to sue you and you're going to settle with them. So have a reputation as an insurance company and a business that if you screw up, you do the right thing. You go pay. They don't have to get a lawyer. If you don't screw up and somebody's suing you frivolously, you don't settle. That's like negotiating with a terrorist. You're going to lose. And you have to stand up and do the right thing. If you take the easy route, you're going to end up giving your business, your value away, because everybody knows they just have to be like the bully on the playground and you'll turn over your lunch money. So do what's right, keep it simple, and pick good partners and see value. Don't buy cheap fake insurance. If you want true insurance, call your agent, get X insurance.
Yeah. So I think that's it for today. Unless you have any other points you want to make,
Well, I think that's pretty good.
text me some more, and we'll see you
Yeah,
in a
you
few
guys,
weeks.
people, if you have questions or you think I'm stupid and you have a point to make, email Parker or me, and we'll share your thoughts and we'll give you our answer, right or wrong.
Yeah. So we'll see you on the next one. Thanks for joining us.
See ya.